Hello and welcome to Pest Control Unlocked. I'm Konstantin Schwartz. Over the last few weeks, the three biggest pest control companies in the world published their first half results: Rollins, Ecolab's Pest Business, and Rentokil Initial. I've done an episode on each of them. So I then had an idea. I'm not sure whether you watched the World Cup. They had a feature there by Alexei Lalas, who presented the power ranking throughout the tournament. Well, I thought I'd give it a try here, following the presentation of the results by the big three. Today I'm putting all three side by side. I've picked 5 measures, not analyst measures. The 5 things you track in your own business: revenue, growth, profitability, retention, and your connected portfolio. The first 3 measures, revenue, growth, and profitability, I can compare all 3 companies. That is this episode. So this is part of the scorecard, looking first of all the first part of this episode. Part 1 is all about the money. By the end of this episode, I'll have 3 measures graded and a partial board, and I'll tell you now how it finishes because it's the reason I split this into 2. After the 3 financial measures, the company that grew 8.9% and the company that grew 3.6% are tied, dead level. Everything that separates them happens in part 2, and none of it is about performance. Some housekeeping first. Nothing in this episode is financial advice. I'm not a financial advisor, and I'm not offering you one's opinion. If you're making investment decisions, go and talk to a licensed professional who knows your situation. This show is for educational and entertainment purposes only. Everything I say here is my own view and nobody else's. And for transparency, I am a former Rentokil employee, and this reflects my personal views and not investment advice. 2 things before the first measure. Everything today is the first half, January to June, not the quarter. There's a reason for that. Rollins and Ecolab file full quarterly accounts. Rentokil is UK listed, and for the first and third quarters, it publishes a trading update. Revenue, yes, but not a single line of profit. The half year is the only period on which all 3 publish everything. And these are not the same businesses. Rollins is 100% pest, mostly North American, mostly residential. Rentokil is global, both residential and commercial, plus hygiene, plus lake management, plus distribution, and pest is 83% of its revenue. Ecolab's pest business is commercial only, no residential book at all by deliberate choice, and it's 7.8% of a group that did $8.5 billion in the half. So I'm not ranking them on size. Every measure today is a rate or a ratio. Scoring is simple. First place on a measure scores 3 points, second scores 2, third or nothing published scores 1. We're looking at 3 measures in this episode: revenue, growth, profitability, including cash. So let's go. Let's take a look at revenue, which is graded on growth. Rollins did $1.9 billion of business in the half, up 8.9%. Ecolab's pest business did $660 million, up 8.5%. Rentokil did $3.5 billion, up 6.7%. So looking at the growth rates, that puts Rollins first, Ecolab second, Rentokil third. Rentokil is third on any basis you pick, and the gap widens if you strip out currency. Now, there's exactly one clean like-for-like comparison available in this entire analysis, and it's worth 30 seconds. Rollins total turnover, $1,985 million. Rentokil North America Pest Control Services, $1,794 million. Those 2 businesses are the same shape: North American, route-based, contract pest-based service, and same 6 months. That's it. That's the whole overlap between the 3 largest companies in this industry. One pairing. And here's the first problem with the grade I just gave you. Rollins publishes reported dollars. That's all. There's no constant currency figure anywhere in its release. Ecolab leads on fixed currency. That's the 8.5% growth. But it also publishes public currency, and on that basis, pest revenue grew 11%. Rentokil leads on reported, the 6.7%, but it publishes constant currency alongside, and that's 4.5%. So look at what the currency is doing. Rentokil's reported number carries 2.2 points of currency tailwind. In its international business, it's 5.7 points. And Ecolab runs the other way. The figure it leads with actually understates its reported growth by 2.5 points. On public currency, Ecolab grew 11% and wins this measure. On constant currency, Rollins' lead over Rentokil gets bigger. I've graded it on each company's own headline basis, because that's the only way to use all 3. But I want to be straight with you. That's not a like-for-like comparison, and no combination of these 3 disclosures gives you one. Here's my take. Rollins wins the measure it should win. It grew fastest. But 3 companies publishing 3 different primary currency bases means the top of this board is decided partly by an accounting choice. That's not a footnote to the finding. On measure 1, it is the finding. Measure 1 asked how fast. Measure 2 asked how it was made. Organic growth first. Ecolab 7%, Rollins 6.1%, Rentokil 3.6%. Now the share of growth that was bought. Ecolab bought 13% of its growth, Rentokil bought 20% of its growth, and Rollins bought 32%. And I'm grading this measure on the second number, not the first. Let me explain that, because the 2 columns point in different directions. Measure 1 already graded growth rate. If I grade a rate again here, I've just run measure 1 twice with a slightly different number, and Rentokil finished last in both for the same reason. The quality question is different. Of the growth a company reported, how much did it generate itself? Ecolab generated 87%, Rentokil generated 80%, Rollins generated 68%. So Ecolab first, Rentokil second, Rollins third. Rentokil takes second while growing slowest of the 3. Its growth is thin, but it's largely its own. Rollins takes third while growing faster than Rentokil because a third of what it reported was purchased. And when you go one level down inside Rollins, it gets sharper. Residential added $63.4 million of revenue in the half. $32.1 million of that was bought. That's 51%. Commercial bought 18% of its growth. Termite and ancillary bought 21%. So residential, the line that slowed, the line that took the share price down, is nearly 3 times as acquisition dependent as either of the other 2. Residential organic growth for the half was 3.9%. The service line growing slowest under its own power is the one leaning hardest on the checkbook. Now, what did the bought revenue actually earn? 2 of the 3 will tell you, and the answer is almost identical. Rentokil acquired 14 businesses in the half for $37 million. Those acquisitions contributed $7 million of revenue and, in their words, nil operating profit. Ecolab acquired 1 business in April for $26.6 million. It contributed $6.9 million of revenue and reduced operating income by $400,000. 2 companies, near identical acquired revenue, neither contributed a cent of profit. Rollins is the exception that proves the point. Romex, a $95.7 million acquisition, closed the 1st of April. In the quarter, it contributed $10.2 million of revenue and $800,000 of net earnings. That's a 7.8% net margin against Rollins's group margin of 13.3%. Acquired books arrive thin. Every one of you knows that from your own deals. What's unusual is seeing 3 filings quantified in the same half. And then there's what it costs to win a customer the hard way. This is in Rollins 10Q in Note 4, and it's in no press release. Capitalized costs to obtain a contract. That's sales commissions, held on the balance sheet as an asset and written off over the life of the contract. At the end of December, that balance was $39.1 million. At the end of June, it was $53.9 million, up 37.9% in 6 months, against revenue growth of 8.9%. Amortization of those costs ran $20 million in the half against $15 million last year. So they added roughly $34.8 million of new commissions, and about $14.8 million of it sat on the balance sheet rather than going through the profit line. That $14.8 million is 2.5 times Rollins's entire operating income growth for the half. 2 things that follow. The reported margin would be worse without it, and this is completely standard accounting. I'm not alleging anything. And organic growth slowed over the half while acquisition costs grew 38%. Those 2 facts together say Rollins is paying materially more per customer 1. That's my interpretation, and I'll flag it as one. A change in mix or in what gets capitalized would explain the same numbers. Rollins doesn't say which. Neither Ecolab nor Rentokil discloses anything equivalent, so there's nothing to compare it to. One more number, and it's Rentokil's own. Their interim statement says the global pest control market grew at a compound rate of 6.6% over the last decade, and it's forecast at 6.2%. Ecolab is growing above that. Rollins is a shade below it, and Rentokil's own North American pest control service line, its largest business, grew 2.6% organic, under half the market rate and decelerating through the half from 2.8% to 2.4%. They published a number that indicts them. Here's my take now. The growth quality ranking is the reverse of the growth rate ranking for the top two. Ecolab is growing fastest organically and buying least. Rollins is buying a third of its growth and half of it in the one line that needed to grow on its own. That's not a criticism of buying. It's a good use of capital when organic is thin, but it means the reported number flatters residential more than anything else in that release. So taking a look at profitability, this is the one measure that matters the most, and it isn't even close. Incremental margin, for every extra dollar of revenue, how many cents of extra operating profit? Ecolab's pest business, 23 cents, Rentokil, 20 cents, Rollins, 3.6 cents. Ecolab first, Rentokil second, Rollins third. Let's take a closer look at this. So Rollins first, because it's the outlier. Revenue grew by $163 million in the half. Operating profit grew by $5.9 million. And I want to be clear, this is not my framing. Rollins publishes incremental margin itself. It's a KPI in their own earnings release. 5.1% incremental EBITDA margin for the half, 7.8% adjusted. Their stated medium-term ambition is 30 to 35%. Every version of that number is in single digits. Where did it go? Employee expenses up 50 basis points as a share of revenue. Fleet up 20. Insurance and claims up 20. Total cost of services up 80. Selling and marketing up 20. Total SG&A up 50. That's not one line item. Labor, fleet, insurance, and marketing all rose as a share of revenue at the same time. That's what carrying a cost base built for 7 to 8% growth through a half that delivered 6.1% looks like in the accounts. Now, Rentokil and their number looks the best of the three until you take it apart. North American Pest Control Services converted 57 cents of every new revenue dollar into operating profit on revenue growth of 3.2%. No root business produces that from growth, and it didn't. North American's adjusted profit grew $37 million. Net cost savings after reinvestment were $28 million. That's 76% of the profit growth. Narrowed to Pest Control Services, where profit grew $32 million against the same $28 million of savings, and the cost program accounts for something close to 88%. That division is mine, not theirs. Both figures are disclosed. Rentokil never states the attribution, but I don't think there's another way to read it. And at the same time, they retired the 20% North American margin target. The stated reason is reinvestment, driving volume growth over short-term margin expansion. Read that next to a 57% incremental margin on a book growing at 3.2%, and it's a company telling you the cost lever has been pulled about as far as it usefully goes. Ecolab is the only one of the three earning margin from the business rather than from cost, and it's spending nearly all of it. The half-year bridge, 5.3 points earned from pricing, volume, and productivity. 4.8 points given back to investment in the business, including pest intelligence. The first quarter was 5.4 earned and 4.9 invested. The second was 5.4 earned and 4.7 invested. Now, when I did the Ecolab episode, I said the next thing to watch was which side of that bridge moved. I said my guess was pricing widening, and that if instead the investment line came down, this transition was converting faster than management was letting on. Neither happened, and I got it wrong in an interesting way. The earned side is identical, 5.4 both quarters, and the investment side did come down, but only as a percentage. Turn it into money. 4.9% of first quarter organic sales is about $15.1 million. 4.7% of second quarter organic sales is about $16.2 million. The percentage fell. The spending rose about 7%. Organic sales simply grew faster than the investment did. Nothing eased. Ecolab is spending more every quarter and growing fast enough that it costs a small slice of the margin. I'll take the correction, but notice what it took to find. Converting a percentage point bridge into dollars using an organic sales figure from a different filing to establish that a number going down means spending going up. And then cash, which is where the two-way comparison is sharpest. Ecolab doesn't disclose cash at segment level at all. So this is Rollins against Rentokil. Rollins' free cash flow fell 10% to $277.3 million. Conversion fell from 124.9% to 110.2%. Rentokil's rose 12.8% to $318 million at 95.7 conversion, net down 2.4 times EBITDA, inside its target range for the first time since they bought Terminix. Conversion above 110% is still strong in absolute terms, and Rollins is running at 1.0 times leverage. There's no solvency question here. One company's cash went backwards by 31 million, while the others went forward by 36 million. Here's my take. One of these companies earned its margin from the business. One manufactured it out of the back office and had the honesty to retire a target rather than bank the win. And one converted 3.5 cents on the dollar and is still explaining why. So the scoring goes here: Ecolab 3, Rentokil 2, Rollins 1. So there are 4 things that could make me wrong, and they all belong on the record. 1. The 3 profit figures are not the same measure. Rollins is a GAAP operating income. Ecolab is segment operating income at fixed currency, excluding corporate amortization and special charges. Rentokil is adjusted operating profit at constant currency, excluding $97 million of intangible amortization and $112 million of one-off items. Those adjustments are worth 5.8 margin points to Rentokil. On a statutory basis, its operating margin is 9.7% against Rollins' 17.5%. Does that rescue Rollins? No. Its own adjusted figures move it by about half a point. But no reader can put these 3 margins side by side without doing that work themselves, and nothing in any of the 3 filings tells them to. 2. Termite sits outside all of it, and it isn't symmetrical. Rentokil's legacy termite provision closed the half at $392 million, with $115 to $125 million of cash going out this year. None of that touches the adjusted profit I just ranked them on. A charge added in every period since Terminix deal is arguably not a one-off. Rollins had the opposite exposure. Termite and ancillary is $429.6 million of revenue, 22% of the business, growing 11.9%, its fastest line. It's writing new warranty obligations at pace while Rentokil pays down old ones, and it doesn't separately quantify a provision. Ecolab has no termite exposure at all. 3 companies, 3 completely different positions, and not one of my 5 measures sees any of it. 3. The first half is not the season. The third quarter is the biggest in this industry. The first half is the ramp into it, which is exactly why Rollins' problem took the shape it did, a cost-based staff for a season that hadn't arrived. This is a scorecard on the run-up, not the race. 4. None of them tells you the price-volume split for a pest business. Rollins publishes no split. Rentokil says pricing is ahead of inflation and never quantifies it. Ecolab does publish price and volume, 4% and 1% in the second quarter, but for the group, not for pest. Every volume conclusion I've drawn today is an inference that exists only because that split is withheld. I'll come back to this in part 2 because I think it's the single most useful thing any of them could publish. So looking at the score at the break and taking into account 3 measures, there are 9 points on the table. Ecolab has 8, first on growth quality, first on profitability, second on revenue. Rollins has 5 points, first on revenue, third on the other 2. Rentokil has 5. They're tied. The company that grew 8.9% and the company that grew 3.6% have exactly the same score after every financial measure I can compare. And that is where part 1 has to stop, because the 2 measures left are retention and connected infrastructure. On the first of those, 1 company out of the 3 publishes a number. On the second, 2 publish something, and it isn't the same something, which means the tie between Rollins and Rentokil gets broken in part 2. And it gets broken entirely on what each company chooses to tell you. All of this is now in part 2. This has been the first part, and it's now up to you to go to the second part to continue. This is Pest Control Unlocked. My name is Konstantin Schwartz. Thank you very much for listening.